Okay, so let's start off with um, share capital problem solving. So we have the XYZ company, which actually had decided to sell their shares to the public. Okay, so we have 1 million ordinary shares available to be sold. Okay, and then the share price we're given, the total share price is $1, and the amount is subdivided into 30 cents for application, 60 cents for allotment, and 10 cents for call. Okay. So the first transaction happened here. You will see we receive payment from the public who wants to purchase the share at $320,000. Again, please correct that amount. It should be $320,000. And then they decided whether there are excess on application money that will be applied on any allotment in the future. Okay. And then 30th July, the shares were allotted. The allotment monies were due were received on 7th August, and then final call was made on 26 August, and call monies were received 14th September. On 23rd September, we have issued bonus shares for 90 cents, and then 30th September, general reserves was created for $20,000. Okay, so let's go on to the first journal entry. So 7th July, you received the money. Okay, so before you record it at cash at bank, put it at bank trust. Okay, so for those who had studied company law, this is the first procedure. Okay, so before you transfer it to cash at bank, it should be placed into bank trust. Okay, so we can be assured that the shares will be distributed, okay, before the money will be used. So in this case, we have $320,000. So that's the amount that they received. 30th July, we had allotted the shares. So the entry for that one, or shall we say distribution of shares, will be debit application. So 1 million multiplied by 30 cents, that is 300,000. And then allotment, 1 million multiplied by 60 cents, we have 600,000. So share capital here, total amount will be $900,000. Okay, so clear on this? Right? Now, as the problem said, any excess on application, you see the application here is $320,000, but the application that can be consumed only will be $300,000, so which means there is an excess. So in the problem it says the excess will be applied to the allotment, outstanding allotment. Okay? Take note, allotment is like a receivable. Okay? It works like a receivable, which means the company is expecting the subscribers or applicants to pay in the future. So in this case, instead of returning the money to the applicants, they just applied it to the outstanding so-called receivable, which is, we call it allotment. So debit application, credit allotment. So difference between the application money paid here, $320,000, and then application amount of the application that we can provide, okay, as company. Now after this, okay, usually after this, you can transfer now the bank trust money to cash at bank. You don't do this if you haven't satisfied this distribution of share. Okay, that is a common mistake. What some will do after this, they will debit cash and then credit bank trust. No, that is incorrect entry. You must allot or distribute first the share. After that, you can do this entry. Okay, debit cash at bank and then credit bank trust. Now on 7th August, it says all allotment monies were received. So debit cash at bank and then credit allotment. Now because we already applied the $20,000, okay, we are not supposed to collect all that $600,000 here. because we already applied for that $20,000. So which means the total outstanding allotment at the end, at 30th July, okay, end of the day, will be $580,000 only. So that is the total amount that you will collect. Okay, 580,000. So debit, cash at bank, and then credit allotment, 580,000 on 7th August. Okay, so clear on this? Right? Okay. Now, confusion will happen because some of the students will not update how much is the allotment. Okay? So, usually, I would suggest if you can keep the account of application, allotment, and also bank trust. If you can do that when you're solving the problem, then it's easy for you to trace whether there is or what will be the amount to be credited or debited in the future. Okay? But if not, if you don't want the account, just going straight here, you know how much will it be. So application, 320,000 credit there, and then there's an application here, debit. So which means there is an outstanding credit balance of $20,000. Okay? So either you do the account, or if you don't want to, you can always trace. Okay, go back and trace what happened to the previous transaction. Okay, in that way, you will know how much will be the amount that you will use. This is a common error which the students had actually encountered, okay, especially when I'm conducting the test or especially for final exam. Okay, so be careful of that one. Okay, so those are so-called the tricky part, okay, of the exam. Now, on 30th August, the board had made a call for the share. So, again, 1 million shares multiplied by 10 cents. It's given there. Call price is 10 cents, okay? So, we have $100,000 there. So, debit call, credit share capital, $100,000. Okay? And then, you collected all the call money. So, debit cash at bank and then credit call on September 14th, we have $100,000. Okay? So this is actually much simpler, okay? Straightforward. Call, that's like a receivable, similar with allotment. Okay? So what you will do, debit call, and then credit share capital. Now here you're waiting for the subscribers or applicants to pay. When they paid, debit cash at bank and then credit call. Okay. Now, 23rd September, there was a bonus issue declared by or to be issued by the company, 10,000 bonus shares. The share price for that bonus share will be 90 cents. So, this is quite simple. Debit retained earnings, credit share capital, $9,000. So, 10,000 shares multiplied by 90 cents. So, $9,000. Okay, 30th September, the company created general reserves from retained earnings. So, debit retained earnings and credit general reserves. General reserves is part of the equity section, okay, in the financial statements. So, it's just like you're transferring your accumulated profits and trying to set up a general reserves. Okay, general reserves may be signifying that the company is ready to allocate certain portion of their income on certain activities. For example, if they want to expand their business. So it's just signifying that we're ready. We are allotting a certain portion of our profits just to make sure that we will be able to so-called fund, okay, the future project. Okay? So that is one example of general reserves. There will be plenty reasons why the company is putting reserves. Okay?